Again, good afternoon. Welcome to our open office hour series on multi-book accounting. Today is a short session, but hopefully will be very informative for everybody. And we're just going to talk about the setup and some of the functionality that multi-book accounting has. So with that, I am going to switch over to NetSuite. Hopefully you can see my NetSuite screen now. And let's start the demonstration. So multi-book accounting is a feature that NetSuite has if you have a One World account that allows you to have additional accounting books so that you can do your reporting in different accounting standards. So if you have a US operation that has a UK subsidiary, you may want to be able to report in this UK in IFRS and also GAAP for consolidation purposes, so that you would have two sets of books. And the way that NetSuite does that is by the addition of additional sets of books. So whenever you get your account, initially you're going to have your primary book, which is the one that is standard with NetSuite. That's going to be called your primary book. But when you have multi-book accounting, under the accounting section and the setup, you'll see that there's going to be a new multi-book accounting feature or section that is available. And what you'll be able to do that is create, the first step is going to be that you are going to be able to create multiple sets of books or additional accounting books. I think the limit is 5 additional accounting books. So it's not unlimited, but you can apply an accounting book to multiple subsidiaries. So here you'll see that there is a primary accounting book that was created with the account. And if I open that accounting book is going to be, by default, applicable to every subsidiary that is in the system. Every subsidiary that you have under your subsidiary structure is going to have that accounting book, and that is where the transactions are going to be posted to on your normal day-to-day of your operations. Every transaction will be posted and created always against that primary book. But when you create a secondary book, so if we, for example, look at this IFRS book, you'll have the ability to do a couple of different things. One, you'll be able to obviously give it a name and assign it to specific subsidiaries. So the secondary books or tertiary books, all your non-primary books, are going to be applicable to the subsidiaries that you want to apply them to. And you can, if you have subsidiaries that have children subsidiaries, you can apply this include children, so you don't have to check every subsidiary. You can select whether you want to enable consolidation for that. So if you have a parent-child relationship in some of the subsidiaries, you want to enable consolidation. So you'll have to check this enable consolidation checkbox. And whenever you enable it, you're going to have an effective period. If you're doing it into the future, if you're trying to set up your accounting book, you'll have to set up this effective period. So, it's the transactions start occurring after that effective period. Once you do that, you'll have all the subsidiaries that are available, and you can define, once you select them here, you will be able to define when you initially set up, just like you can with your subsidiaries in the subsidiary section, when you're setting up that, what is the primary currency for that accounting book. It does not have, it's going to default to the primary currency of the primary book, but you can change it when you initially set do the setup. And you can see here that in this case, in Mexico, for example, the primary book is in US dollars for that subsidiary. For the secondary book, the IFRS book is in Mexican pesos. And then you have the option of having that, or you have to do the process to activate that book, and eventually you can inactivate that book if you want to stop reporting or having the system create those transactions for that accounting book automatically. So you have the option of activating and inactivating those books. Like I said, you can create multiple accounting books, up to 5 additional books, and assign them to those subsidiaries that are applicable. If new subsidiaries get added, then you have the option of selecting those subsidiaries in the corresponding secondary book after they're added into the primary accounting book. Once you have your accounting book set up, the next step is going to be the ability to create mapping rules. So there are 2 types of mapping rules that are available. The first mapping rule is going to be what's called an account mapping rule. So if you want to just do a to and from account, that I will apply, for example, for journal entries, but also applies to other transactions, based on the posting accounting or account for those transactions, you can create that. So for example, if we look at this example of accounts receivable, this is a mapping rule that's being created for the accounting book or statutory accounting book, specifically for France. And the rule it's effective on, so you define a start date. You'll have to define this initial start date. You don't have to define an end date, but if you know that that mapping is going to change in the future, you can set an end date and create a future dated mapping so that it seamlessly, gets added to your operation when that effective date hits. In the mapping, you define your source account from your primary book, and you can add additional classifications so that it looks at all those classifications as part of your mapping rule. And then you define the destination account. And then it will use the same department, location, and class for the destination posting, but it will use a different GL account. So in this case, you can see that accounts receivable, which is 1100, is mapped to an account called 041-0, customers and similar accounts, AR. And if we go to our accounts in a chart of accounts, it's the same chart of accounts. There's only still one chart of accounts, but you'll see that there are different account numbering structures in your chart of accounts that are created. And in this case, if we look at this 041 or any of these 0 accounts, and then we open them, you'll see that these accounts are limited to France. So you can create and import accounts, and as we know, assign those accounts to that subsidiary. There's no accounting book in the account itself, but you define it to that subsidiary, and then you can use it in this global accounting rule, and it's going to do that mapping. This is in addition to the context of localization and accounting context, which is a separate context where you can have, for the same GL account number, different account numbers in the same accounting book for that subsidiary. And we're not going to cover that topic today, but that is a concept called accounting context, which naturally, dynamically, you can have different, without having additional accounts, you can have different account numbers based on the subsidiaries. That way, if you're bringing a subsidiary that's used to an account number for AR, and you don't want to have to retrain them on the new account number, you can use that accounting context for that. So encourage you to look at accounting context in Sweet Answers if you're curious about that. But that, again, that is more related to the same accounting book, not to the context of multi-book accounting. So we looked at global accounting, and now the other accounting or mapping that is available is the item item mapping. So in the item mapping, that open, you'll have the option of selecting same ideas, effective dates, books, but you select an account type. So you can do it by account type, and within account type, you can define the actual account that you're going to map, and then define a destination account. So it's a little bit more granular because you're doing it by specific account type. So similar rule, a lot of information on Sweet Answers for that. But once you have your account mapping and you've enabled account multi-book accounting, there's an additional step that I can show you that is done once, which is a step to convert your history for those subsidiaries that have applicable accounting books and kind of catch up to the day that you activate that accounting book. So if it's new subsidiaries, that process doesn't run. But if you happen to already have a France subsidiary for a year in NetSuite, and now you were reporting, on the IFRS standard outside of NetSuite, you have the option of taking that history that's been in the primary book and creating retroactively that secondary book. And that is a process that is more like again, a one-time setup. That if you were interested in implementing accounting book, there's a lot of information in the user guide to do that. And it's really just processes in the background. It's not a frequent process. So once that is all done, then what you'll notice is every time you enter a transaction. So for example, if I go and look at specifically a journal entry, for example, I'm going to close some tabs. And I'm going to do also, while that opens, I'm going to look at an invoice. So let me look at my list of journal entries. And I can look at this journal entry, for example, in Mexican pesos. This journal entry was created for the Mexican subsidiary in US dollars. You can see the currency. Sorry, this was created in Mexican pesos, the transaction, the subsidiary is in US dollars. And you can see the account that was selected for that. It's going to, for every transaction, whether there's mapping or not, is going to give you an accounting book in the different accounting books that company or that subsidiary has configured for it, and it's going to then show you the GL impact by accounting book. So you can see here the accounting book for the primary book that is the one that is in the entry of that journal entry, and then the different accounting impacts for the different accounting books. And in that you can see the subsidiary is always going to be the same, but then the currencies are different. So the primary book is in US dollars, the secondary books are in Mexican pesos, and it's going to the GL impact, because the GL impact, even though the transaction was in Mexican pesos, the currency of the Mexican subsidiary is in US dollars, so the accounting impact, as we would expect, is in US dollars. So you can see here, in all cases, the account is the same, but there's different accounting impacts because of the multi-book accounting. And it's the same that you will see in the accounting impact if you were to open the standard accounting impact here. It's going to show you the different accounting impacts here. So you can see that as well, and they're all posted. For some reason, it's not showing the primary here. I think there's a bug, but you can see that it was showing on the other. Same thing for invoices. So if I open an invoice here for my Indian subsidiary, let's wait that to open. You can see that I have an invoice here for my in rupees for my Indian subsidiary, and it's if I open I have an accounting impact, but if I look at my accounting books, this has again 2 accounting books, and if I look at the GL impact, I don't have the GL impact tab showing here, but if I open the GL impact here on the standard GL impact, again, it's giving me that error, it's going to give me the different accounting impacts, in this case for IFRS and the statutory book. So the primary impact is always going to be there. The secondary impact is going to be available, if you have multi-book accounting for that subsidiary. So that's going to happen for every transaction that you create where that subsidiary has a secondary accounting book. Additionally, with multi-book accounting, then you have the option of creating book-specific journal entries. So you have your standard journal entries, you have your standard intercompany journal entries, and then you have book-specific journal entries that are both single entity and intercompany journal entries. And again, all the functionality is applicable. So if I look at one journal entry that is book-specific, that book journal entry, when you create that journal entry, and I'll open one, and then you have to select the accounting book. As opposed to in a normal journal entry, you don't select the accounting book. It's always going to be the primary accounting book. When you create that journal entry, you're going to have the primary book as a field. This is created from an amortization schedule in the primary book, but it will only affect the primary book. It will not affect any of the secondary books. So those are the kind of adjusting journal entries or specific journal entries that you need to do only in those accounting books. This would be what you use for that. Finally, so then, then your reporting is basically all the same. If you want to run any type of reporting, you can customize the report to do your accounting book reporting. When you look at your financial reports, we'll open the balance sheet and the income statement. What you're going to get with MultiBook Accounting is you're going to get the accounting book selection here. So when you're running an accounting book for a specific subsidiary, let's say I'm running it for France, I can run that accounting book in the IFRS adoption accounting book. So this is for last year. You can see this is the income statement for that, or I can change it and show me the primary accounting book, and then refresh, and it's going to show me the income statement for the same period, but using the primary accounting book as the book that which is reporting. So it's going to have a different result based on that the accounting book and then with the entries that I entered in that account. So you can only run one accounting book at a time, but every subsidiary that has that accounting book will give you that information. So if I'm trying to look at US doesn't have, it defaults to the primary accounting book. If I were to look at IFRS, it's not going to give me any results because the US doesn't have an IFRS accounting book. So it'll obviously give you that as you're running. Same thing with the balance sheet. You're going to have the same context where you can run your balance sheet as of the current period and as of March of 2021 for France and the IFRS book. And I refresh, and it's going to give you that balance sheet using that accounting book. So that is multi-accounting. It's a very good feature to have if you have companies in other countries where you need to have that statutory accounting book without having to create another system or have something in Excel. It's relatively easy to set up once you get past that first catch up of other transactions, and it allows you a lot of flexibility to manage all your accounting needs in NetSuite. So we'll hang on for a few minutes to see if there are any questions. But if not, thank you again for your time, and hopefully this was useful and you can start exploring more about MultiBook Accounting.